Hello guys, welcome to the Train Parrot. I'm looking at the big well explorer, and since we top at 73k, we have this magnificent spike in number of wells, large holders depositing into exchanges. Since then, we have a movement from 73k to just above 60k, and what's keeping my eye is that this behavior continues to happen. The indicator is still in the very extreme red, showing that they are currently depositing a lot more than withdrawing. And that is a sign of distribution. In today's video, I'm going to focus on different sources of data that could be indicating that a distribution from certain hands into other hands is currently happening. I'm also going to give you an update on the 4-hour and 1-day timeframes, and we will look into where is the liquidity located currently. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I upload one of these videos. And the two best things that you can do for this channel is watch the video until the very end, and do not go anywhere without leaving a comment down below. So I will be really irresponsible if I was only looking at one source of data to try to assess whether there's a distribution going on currently with Bitcoin. Let's assume that the well explorer is completely wrong, and let's try to look into other sources of information that maybe are going to complement what we are seeing in this chart. And for that, I'm going to look into the long and short-term holders. Long-term holders have a very typical behavior. They tend to buy cheap and sell expensive. As simple as that. And you can confirm that by looking at this blue line at the top, which represents all the long-term holders' actions. And you can see how in this cycle they are accumulating. So the blue is going up most of the time at the lower prices. And as soon as this starts running up, they start distributing and selling. But at the same time, you can see a divergence between the blue line and the orange line. The orange line is the short-term holders that are buying from the long-term holders. In other words, they are inheriting a red bag to hold for the rest of the bear market or to sell at a loss later on. That's the price of FOMOing into an asset that is running hot to the upside. You can see the same effect in the bull run during late 2020 and early 2021. The long-term holders start distributing as we move up. They see that as an opportunity to sell expensive and realize profits, whereas all the people with the FOMO, short-term holders, inexperienced traders, are buying into the narrative of the price going up for no reason, some of them becoming even Bitcoin maxis during the bull market and deciding that the best plan is to hold it forever. And there's nothing wrong with that, but there are better timings and there are horrible timings. And probably the worst time to be buying Bitcoin is when Bitcoin is pumping. For example, here, right after we passed the 20k all-time high, there were just 4 months left for you to take profits. Of course, after this depression, when we went almost to 28k, there was another run to 69, but at that point, most of the retail was gone. There were only a few people doing futures, and with high leverage, they managed to pump one last time the market. Let's focus on the latest time of Bitcoin so we can see what these two different groups are currently doing. You can see that from early 2024, the long-term holders are distributing and the short-term holders are accumulating. So there is, in my mind, a lot of controversy around this particular behavior because this time there is the ETF. So I'm wondering if the ETFs qualify as short-term holders because there's a likelihood that those wallets that are currently managed by the ETFs, the cold storage, might qualify by this tool as a short-term holder as well, in which case this will be a combination of actual short-term holders together with these new short-term holders that are eventually going to turn into long-term holders as well, the wallets of the ETFs. But if we were able to exclude the wallets that belong to ETFs and just focus on this behavior, we could say that it's very clear that there is a rotation of Bitcoin from one group to the other, just like it happened on every single pump. One assumption that I'm making is that long-term holders know better what they're doing. They tend to pick better times for distribution in accumulation. It's not necessarily the case to all those wallets, but in average, that's kind of the behavior that you will expect. The network value transaction is the hottest it ever been, according to NVT Studio. You can see that at this peak, we didn't have network value transaction even above the limit of 70. During the first half of the second peak, we have quite red around here. And then when we started the bull market from 17 with the first pump, we also made it to 89. But since January 2020, there's nowhere that we can get as red hot as in here, where we're reaching an all-time high of 98 for the NVT. What I'm currently looking for, if you know me, is for a breakdown below this red line. And if you're following me on Twitter, my handle is Trading Parrot. You will be the first one to know once we have this breakdown. And believe me, most of the breakouts to the upside and breakdowns are extremely meaningful for this indicator. The latest that we had, and you can scroll down and find my videos around early January, and I was calling out for the MVT finally breaking above this line. I repeat the same angle everywhere, and every time that we stick our heads in MVT Studio above this line, then there is a massive run. And not all the times, but most of the times when we come very hot in the red area and we start coming down, there's usually the beginning of a downtrend or at the very least some sideways. Let's look at the liquidity. On the 1 month, I can see that all these lucky people that enter with a short at 74K are still holding. There's liquidity there. They might get forced closed, and it's kind of getting really shiny, this level. And since the price is coming so close to it, I'm very tempted to say that there is a high likelihood that the price might visit 74, at least to take them out, if not to break out above that level as well. The risk in the market can increase, and we're talking about the risk of a big correction, but it's very difficult to spot precisely which day the correction will happen. And markets can continue running hot and keep pushing and pushing, but the higher they push without a correction, the higher the likelihood that that correction can happen and the biggest the pullback can be. Contrary to what people are expecting, that they've been saying every correction is 20% in the past year. They're getting used to that. They're being spoiled by that fact. And the recent correction didn't even make it to 20%, which is also contributing to people gaining even more confidence on thinking that Bitcoin will just non-stop going higher and higher. We can see here in FAR charts that some levels above the current price are becoming quite hot. I can also see, this is the weekly chart, that the 1 million to 10 million band is currently distributing at the same time that the purple that tends to lead the decisions in the market is currently accumulating. So we have a divergence there, and I wouldn't be surprised to see some spikes here into the 72K and later in the 75K. Later in the video, we're going to give an update on the daily and 4-hour. Remember that we had a target to 75K that we set the previous week. We're getting very close to the halving. There's only 24 days left, and there's been some depression in terms of people paying attention to Bitcoin and searching for it coming from Google Trends. We made a top of 52 around here, and during the previous days, this made it almost to 19, which was quite low, and now it's bouncing back into 33 thanks to the bullishness of the recent moves in the price. The highest we've been is 52, which means that there's still room for this to develop much higher. And since this whole thing in Google Trends is normalized, it doesn't mean that we're going to end at 100 here, because if the interest in Bitcoin becomes really high, you're going to see that this number that is occurring in 2020 is going to start coming lower in the similar way as these levels from previous cycles are becoming lower. And that's a normal effect with every cycle Bitcoin has become more and more popular. Today, most of the alts have been pumping pretty decently, and now with some small pullback on Bitcoin, this is coming down around 4 points on the RSI 4-hour in average. But you can see that there's still a lot of resilient tokens here at the top. Those are very good candidates that might hold better than other tokens that as soon as Bitcoin sells out, they immediately go below the neutral area and starting to tap into the weakness. Going back into liquidity, the fair value gaps, we can observe here that we have a fair value gap at the top located at 72.5 that we haven't reached yet. We are leaving behind some fair value gaps at 66.4 and also this one that starts from 69 to 60 and ends at 67.6. On the weekly, it's very interesting to see that the highest we've been around here, if we extend it as a support, that has held us so far. And right now we are doing that the first green candle above that support, confirming that this is still holding. On the monthly, if we manage to close at these levels, as I said yesterday, if we outperform the previous all-time high in the close of March, that's going to be seen as extremely bullish and the market might enter the completely mental state and start pushing higher still for longer that I'm expecting. There's less than a week for March to end, so we will have to see how this develops, if it can hold above my green line or if it's going to start getting rejected. And before I forget, there's also a big magnet located between 64 and 66.4, which is a CME gap formed on Sunday during this weekend. CME gaps tend to act as a very strong magnet, and I wouldn't be surprised that before we do anything else, we come back here to fill fully the gap or maybe just partially. In terms of liquidity injected from China, you can see that there is a tiny fraction, but it's relevant because it's the first time in many days that the injections into the market show any sign of increasing. I remind you that what we are looking for to get confidence into the market is either liquidity here in this area of the chart coming from China or from the Federal Reserve. We also monitor different central banks to see if they are increasing. Is always a good sign. The more liquidity we have in the market, the more chances it can continue running up. Looking at the VWAP, you can see that we've been most of the time above the VWAP and we have spent the past few hours testing it and the bears have failed so far to push it below the VWAP. Remember that the price being below the VWAP calls for a downtrend and at the moment they're just accumulating sell orders at around 71 to 72K according to Trading Light. On the 4-hour, after we have this breakout here on the 20th of March above the purple line, then we have this breakout here above the red line, and then we have this breakout here above the yellow, and finally the fourth one, which was the top yellow line, that ended up being a fake out. So as you can see, you have 3 out of 4 that played out. And this is for all the users that are thinking that trading is gambling. If you are experiencing trading, what you're looking for is for probabilities. And as you can see, 3 out of 4 breakouts of the momentum have led to the price increasing. There's only this last one here, the fourth one, that actually broke out and then immediately after came back below the line and testing it right now as a resistance and pointing downwards. That also shows you that when you take these trades, it's very important to have risk management. So you will have had 3 wins and 1 loss. And as long as you also make use of a good risk reward ratio, measure your targets and your stop losses and make sure that you need less trades to stay profitable after multiple consecutive trades, then you should be fine to survive in profit in the long term. At the moment, we have also broken out this pattern as opposed to what I was believing. I was thinking that the right shoulder was too large here to cause a breakout. We have so far broken out from this pattern and we have managed to take roughly 60% of the full target that was pointing to 75K. Now, if we look at this dotted green line, which is formed by the CPR monthly of March, you can see that it has been resistance many times, support many times, and in here we broke above, and it seems like we are currently retesting it many times again, but as support. So that from the point of view of CPR looks pretty bullish, although this area here on the RSI looks like there is some loss in momentum. We took a bullet, but the CPR looks promising for a potential last push to finally achieve the full target of the inverse head and shoulders. Guys, all of these setups, I'm constantly keeping you up to date. Remember to follow me on Twitter. My handle is Trading Parrot. And if you are deciding to take any of the trades that we're talking about, or your own trades as well, make sure that you don't miss my event on OKX. The link is in the description. There's a prize pool of 100,000 in USDT. You can even win a MacBook Pro, iPad Air, or Apple Watch. And if you're struggling to get access to trade with perpetuals, with futures, you can have also a look at the link in the description for BingX. This exchange is KYC friendly and only in US, Canada, and UK. You're going to still need to use it behind a VPN. I'm currently hosting on BingX an event as well, so you can claim up to $6,000 in rewards. And the first 100 people that join with the link in the description are also going to get $100, no questions asked, no deposit needed either. All right, guys, thanks so much for watching. I'll see you tomorrow. Bye-bye.